Thursday, December the 31st. Okay, I have a few trades to make, corrections, rollovers, and just changes in some of my trades. So I'm gonna go alphabetically here and see what we got. Let's start with ATVI, and here it is. That's the trade. As you can see, it's got delta 99 is over my smiley face. You can see that here. Let me just expand here. So here is the bottom of my smiley face. The stock is way up here. The stock price is way up here. So that means that we could take some profits. So let's take a look at the chart. And yeah, it's way up there. The stock is reaching new highs. Even today is a little higher than the day before. So what we do is we take profits. We don't care whether it's going to continue on higher or collapse. What matters is that we have a profit and we want to take it. And as you can see, we have, let's see, the January 8th, 85 calls, and those are about to they won't expire. Well, they will expire in the money, which means that we will get 100 shares. But I also see that I have long calls to compensate for that. So that's a 4 calendar spread, for options calendar spread. But here we have the 2 outstanding calls at 90. So we could take profits on that by rolling it up to 95. Okay, so I have 2, so I'm gonna sell what I have and buy a higher strike price as to reduce the deltas, and they're reduced to 25. So let's do that. Confirm and send. And we're gonna get $488 for that. And as far as this calls, they expire next week. Okay, as I said, we have the 4 calls here to compensate. Before that happens, we may get a sign, in which case it doesn't matter. It's not that big deal, because nowadays you get assigned shares, you don't pay much in commissions. So when that happens, we can just simply close the trade. For now, it looks good, so I'm going to keep it, okay, because the stock is going up, new highs. If it collapses, that'll be fine too. Once this gets filled, we can see if we want to correct that. Yeah, we're getting too much credit for it, and so it's not filling. So let's cancel replace. Open the lock here, perhaps reduce it by a few pennies, and that should fill. And there it goes. Okay, so let's go to the Analyze tab. And ATVI. And there you have it. It's at 26 delta, which means if the stock continues higher, we're going to make $26 for every dollar that the stock goes up. But if it collapses here, for whatever reason, we will be fine. Okay, that's the bottom line. We still make money if the stock collapses. I always leave it a little delta positive, because on the downside we have Vega to help us, volatility. On the upside, not so much. So we only depend on delta when it's going up. Let's move on to BABA. And this stock has collapsed pretty much. And I believe that it still has some way to go down to 196. Let's analyze that. And we are delta negative here. And my put, I have a single outstanding put at 20. There's not much to do here. The pretty much the stock is due, the options are due to expire next week, and the calls are out of the money, the puts are way in the money. So what happens? You get assigned the shares. Okay, so but for that I have long puts. When that happens, we can close the trade right now, no big deal. But if the stock continues on lower, we can make some additional money. So I'm perfectly comfortable with being assigned there. It just, you have to pay attention. If you get assigned, you have to close that. All right, for now, just leave it there. Comcast is 156. We are making money on that, 156 deltas. And again, above the smiley face there, we could try to neutralize the deltas are too many. And so we could sell. The stock is trading at 52. Our strike price is 47.5. And we're going to get $5 if we sell 1, 2, or 3 or more of my outstanding calls. I have 19 shorts, 19 longs, so I want to close some of those longs. As to neutralize, 1 would reduce my deltas to 70, from 151 to 72. How about we do 1 more? And that makes it delta negative, and I have no interest in making it negative, so let's do just 1, and that's 81. It seems a little high still. Let's take a look at the chart. Do I want it negative or do I want it positive? Well, the stock is about to reach a new high, so I'm fine with that. Okay, I like it a little positive right now. If I'm wrong, that'll be fine because volatility would spike. I have 20 puts here without any shorts. Okay, so let's do that. Let's get 1 call out of the way and reduce my deltas. There you have it, got filled, and 82 is my thing. I'm thinking that because we don't have any puts, you could sell puts as well, so while increasing your calls. Let me see if I did that, what happens. Well, I could sell the January 15, 1 call and 1 put, same strike price. That will be a straddle. So analyze, sell, straddle. Okay, so I get $4.53. Let's look at the chart. Okay, so that neutralizes my delta quite a bit. And I like that in this situation because the stock is so high. Okay, so that's something we can do to take profits, sell 1 more put, send 1 more call together. And that gives me a little more credit. So that's something we can do. I'm thinking whether we should do that because the stock looks so strong right now. It looks like it's going to break out to a new high. So I'm going to, that's a judgment call, okay? If you feel strongly about it from your technical analysis point of view, perhaps keeping the delta positive is a good idea. Taking a little profit here, neutralizing your deltas. Is that so terrible? Judgment call, my judgment tells me leave it. Okay, leave it the way it is. Okay, let's move on to DGX. Okay, here we have deltas are negative. Let's look at the chart. Making new lows here. It's broke below the Ichimoku cloud. It looks like it might continue on lower, but here in this case, I want to take a little profit by selling 1 of my puts. I have 4 puts, 4 long puts. I don't have any short puts. So by selling one, I neutralize my deltas. If it continues on lower, that'll be fine. If it bounces back up, that'll be fine too. And that's what we do, all right? That's once a week we do this. So we have to try to neutralize as much as we can, depending on how you feel. If you feel strongly, well, perhaps you don't. I'm going to do that. Sell one put, and now we have 3 only left. And now our deltas are more neutral. Let's move on to DHR. I'm going to leave that alone. I have expiration here on the 15th, and the stock is in the middle there, close. The stock price is close to my, there's no big movements in either direction. Let's take a look at the chart. It might continue lower. Well, hopefully the volatility would spike in that case. Let's move to Disney, new highs. Okay, let's take profits, I think. Oh, okay, so January the 22nd. This is an old trade. That's a roll up. Let me look first. Okay, my deltas are 46. We can do a roll up to 80. The stock is obviously above 80, hitting new highs, but it's not over the smiley face, so I'm going to leave it alone. If it was above the smiley face, I might be tempted to take profits. Right now, it looks fine. It's been making good money. I'm going to leave that alone. The LTR, same thing. It's in the middle, very close to my peak here, my cone, my strike price essentially, and we have January calls here and puts on the short side, and there's plenty of time to see those. If it gets close to expiration, then we have more urgency to do something about it. The deltas are very close to neutrality at 32, 33. That's fine. And today I'm making money. Let's move on to Facebook. Facebook is moving up. It's moving very sideways for a while here. It looks like a triangle. 1, 2, 3, 4, 5. Okay, when you have that count, 1, 2, 3, 4, 5, using the tool here, let me use the trend tool. You match your lower points here, and you match your high points here. That's a contracting triangle. And when that happens, it means that the stock is about to get up or down. In this case, if you count from the previous high or previous low, you start counting 1, 2, 3, 4, 5 waves within the triangle. And that means to me that 6 will be up. Okay, the fifth was down, and so Facebook is about to break higher. That's technical analysis, not any other. That's a piece of knowledge you should have. That's by Elliott Wave. You know that's a very strong pattern, okay? And very seldom do I get them. And so my deltas are positive. I'm in good shape. The stock may go to the cone again and make me good money. And it is expiring next week. Okay, so 8 days from now, I can do my rollover to lower my cost here. And let's say I will go to somewhere between now and February the 19th. Let's say February 5, February 12. February 5 will be a month from now. If we do that, as you can see, it becomes delta negative. So that's the opposite of what I want. Okay, so the call could expire worthless. So we could do that on the put. Analyze rolling. And then next week we'll see if we are going to roll over the call side. So by rolling the put, I still remain delta positive, as you can see there. So let's roll over to February the 5th. That gives me good credit. Is negative still, but not so bad. Okay, let's just collect our money. As you can see, if the stock rallies, it will become delta positive, and we have opened the top for further profits to the upside. So I'm going to take my credit here and wait a minute until it gets filled. In the meantime, let's move on to Logitech here. It's below the smiley face. The expiration is January 15th. I like it fine the way it is. Next week we'll think whether we want to roll it over or not. Microsoft, January 29th. That looks delta, close to delta neutrality. That's fine. Let's move on to Qualcomm. Okay, in this case, yeah, it's pretty neutral here. We can do a rollover to February the 5th. Say analyze rolling, double diagonal. And that was the Facebook field. Okay, let's look at the chart of Qualcomm. Looks like it's going up here. Let's analyze that. Okay, so let's go to February the 5th. That seems quite nice, 37 deltas. Right now it's minus, it's negative. If we do only the call side, it's only 5 deltas. Let me take a look at the chart. It looks positive, it looks bullish, so here I would like to take my credit, my full credit. And if you want to see what the curve looks like once you get filled, this is not very good indication. You need to step expiration, set it to second expiration, and this is what it really looks like. So you have also the cone here below where we are, so it's not all positive. We could make money even if the stock pulls back a little bit to 145, where my strike price is. So remember, just do the 2 to expiration. That reveals all your expirations, and this will be what the trade will look like once it gets filled. So that's almost $8 credit times 2. So let's do that. Confirm and send. That gives me $1,558 minus commissions. Okay, and it got filled, and there it is. Let's do 1 to expiration now, and erase what we sold. Just deselect that, and then it looks exactly as expected. See that? So when you have more than 2 expiration, make sure you set 2 to expiration. 2 at expiration, okay? And that will reveal the result. So fine, we got that done. Let's move on to Starbucks. Okay, Starbucks, here, let's take a look at the chart. Hitting new highs. Okay, we want to reduce our deltas if we can. It's already negative, so we are going to do a rollover. This is on the call side. On the put side, we could add puts next week. So we could do just one side, the call side, and that ends up with 45. If we do both sides, select both shorts and say analyze. That's a right click, by the way, analyze rolling, and say double diagonal and change this to February the 5th. And look at your deltas. Here again, we would have to do 2 to expiration. That looks quite bullish still, 137. So doing only the call side is only 45. I think I'm going to do only the call side, and then next week we could add shorts as the January 8th puts will expire. Then you can add short puts. Okay? That would expire in February the 21st. So we'll do that next week. Okay, so let's get our profit, $600 there, our credit. That's it. Now, once again, let's say 1 to expiration, and deselect that, and what looks like is very delta neutral. If it goes down, great. If it goes higher, great. That's the position that we want to be in. Get our credit, get our profits, but still leave it to the possibility of further profits if it goes higher or lower. Let's go to target. Okay, target has been reaching new highs, and I have 2 calls. This is a seagull, as you can see here. The put side is a called ratio calendar, put ratio calendar, and I have 2 calls at 175. The stock is trading at 175. If I sell those 2 calls, then I get neutralized completely. I get negative, and then I end up with those puts as lottery tickets. The stock is trading at 175, and those lottery tickets will be 145. I don't imagine that we will get to 17, that target will get to that 175, but it looks like it's forming a double top here. Okay, so we could get out of those calls. We could also sell a higher strike price, 2 calls, and then but look, we are very close to expiration for those puts. I think we want to get out of those calls and call it a day. We only have 15 days to expiration, so I want to take my profits here and forget about target and leave those puts as lottery tickets. And I took my profits. Imagine that I don't have the position anymore because these puts are so out of the money, they're really lottery tickets. What happens is the short puts will expire, but I still have 6 long puts that I could close at any time. Okay, let's move on to, this is, what is it called? Chart. T-Mobile, that's what it is. Hitting new highs, right, today. That's not going to last too long, is it? Well, hitting not intraday high already occurred, but yeah, for the extra day, for outside day, yes, but it all depends on how it closes today. But it's reaching new highs, so that's good. That's bullish. And here we are, delta positive, barely. And these are January. They expire next week. So we can do, again, roll over the call side only or both sides. Okay, or I could close the position. Okay, so I am tempted to just see what happens if I do the call side only. Why would I do the call side only? Because it's in the money, could get a sign, so we want to prevent that as much as possible. But nowadays it's not so important because we don't get to pay commission on stock assignments. Okay, so let's do the rollover first. On the call side alone, analyze rolling. And we're going to roll this to January the 5th. And what happened? Where our deltas went to 77 from 21 to 77. That's a bit too much, my liking. So let's do the two-side rollover. Analyze rolling. Deselect the call side only. Adjust the date of my new shorts. 377. Okay, the deltas are 122 versus 76. Okay, it looks like the call side alone is a little better. Let's do the 2 to expiration here. That's curious. Okay, so the logical thing to do would be to do the 2 of them, but I just feel that the deltas become too large. Fine, you can still sell one call or roll up one call. Okay, let's first try to get this done. Confirm and send the rollover. And even when it gets filled, we can sell one call or roll up one call. Analyze closing. Sell one of them to take profits. And we'll see what happens when it gets filled. Let's move on to, we'll be back to that in a minute. UPS. That's January 22nd. Plenty of time for something drastic to happen, so let's leave it alone. Let's move on to my monitor tab and see. Pretty much all my trades have filled. Okay, I'm just waiting for T-Mobile here. Say cancel, replace, and let's adjust this a little. Wow, that's a lot. The difference between mid and natural is quite big, so that means that it's unlikely to get filled. All right, so let's cancel that. What if I did only the call side? Analyze rolling. To February. Okay. And see, create duplicate. Yeah, look at that difference. That means that it's just very illiquid. Okay, so there's now many bids and asks, many participants, so then it becomes very low, natural and mid. The difference between natural and mid. So this might not even get filled. No matter how much you try, you may reduce it and so on. So let's try reduce it by 5 cents in decrements. Okay, let's do that. 7. And keep on changing that until it gets filled. This is not going to get filled, I'm afraid. So I can't be here forever, so I'm thinking perhaps the thing to do will be to close the trade altogether. Analyze closing and then say double diagonal. And then just change my closing of the longs. For that you need to customize the trade and then increase the number of shorts, and that will close the trade. Okay. And then we get out of the position. Let's look at time T-Mobile here. We're so close to neutrality here. Oh yeah. we are breaking even on that one. Let's open the confirm and send, and just make sure that you get a flat line when you are closing, okay? Your closing order should cancel everything existing and leave you a flat line. So I'm going to do that. Confirm and send. Okay, I need to cancel the existing order first. And then send that. And yeah, possibly the stock was going to go higher, but it's just very difficult to trade. I will make sure that this gets filled before the closing of the market, but there's not really, at whatever price right now is below the market. Let's see, cancel, replace. You look at the difference. Let's reduce that. I just want to get out of it because it's so difficult. And that's what happens when you have, that's why I try to make the trades liquid enough. And you remember my spreadsheet says not to trade if the difference between the bid and the ask is too large. But that changes. Okay, that's all for today. I will make sure that this gets filled before the end of the day. Thank you very much for joining me, and see you next time. Bye-bye.
Please be sure to subscribe to this channel by clicking on the subscribe button below. Once you have done that, be sure to also click on the bell so you get a notification of future videos coming up in this channel. Be sure also to click like if you enjoyed this video, and feel free to share it with your friends and family. Thank you very much.